Oh my god! Wow!
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks mostly gained on Monday as US-China trade talks unfolded in Madrid and investors awaited a pivotal Federal Reserve meeting later this week. And the market today was largely driven by tech, software, and the mega caps. If we just highlight this part of the chart right here, you can see that a lot of the move today was driven by stuff like Meta, Google, which hit a new all-time high today, by the way. Tesla was up 3.2%, Amazon gained, Apple, Microsoft. Nvidia was largely flat, but given the news that came out of Nvidia and China today, actually kind of crazy that this name was flat today. AVGO was up 1.23%, kind of mixed in software, but broadly green. AMD was up. It was really just a day for a lot of these mega caps in the tech space. And then everything else kind of struggled today. You can see here that the broad market fell. Financials, energy, real estate, healthcare, materials, staples, they were all down today. But stuff like communication services, technology, and the discretionary space were all up in the green, with the S&P 500 gaining 0.33%. We did actually see a gain here in small caps. However, it was largely driven by the growth profile. You could see small cap growth and growth in general, even across the mid caps and large caps, were really the best performers here today, with outperformance coming from the large cap space. The large cap core put in a little bit of work, but then every other sector was in the red value core, smalls, mids. So it was really just a day for growth, particularly in the large cap space. And all of this stems off some what I would consider positive momentum in China trade talks. Scott Bessent came out and said that trade talks are underway and that a framework for a TikTok deal is currently being negotiated on ahead of the ban, which is to go into effect September 17. Shares of Oracle were actually up 3% on the back of this news because Oracle are the front runner as the buyer for TikTok. And ultimately, this is why stocks were kind of bullish today. We also got some very unexpected news from Donald Trump. He came out and tweeted, subject to SEC approval, companies and corporations should no longer be forced to report on a quarterly basis, but rather to report on a 6-month basis. This will save money and allow managers to focus on properly running their companies. Did you ever hear a statement that China has a 50 to 100 year view on management of a company, whereas we run our company on a quarterly basis? And I personally agree with this. The business cycle does not occur in 90 days. Report earnings once every 6 months. You can actually do like a quarterly update in between those times when you're not reporting. It's totally good. It's going to save money. I think it's actually a really good thing. And actually, this is how they do it in most of the rest of the world. The US is one of the only countries that actually do formalized quarterly reports every single year. In most of Europe and here in Australia, we only report half yearly. With in between the periods where we don't report, the management team just provide a quarterly update as to the overall operations for the company. Now, a couple of other market movers was actually Tesla. Tesla was up 3% today, and at one point was up nearly 5% after news broke that Elon Musk bought $1 billion worth of shares on the open market. And you guys know the saying, management teams and insiders only buy stock for one reason. They think the price will go up. And as a result, Tesla was super, super bullish. Nvidia was actually kind of flat here today. Very, very interesting. After news came out that China found Nvidia guilty of antitrust laws, I think particularly as it pertains to its CUDA software system. In the pre-market, Nvidia shares were down as much as 3%, however, carrying a lot of these losses to finish the day kind of flat, which is very, very interesting to see Nvidia flat after this news. You'd think Nvidia would be much lower, down 3, 4, maybe 5% on the back of this news. And then Apple was kind of flat. Very volatile day here for Apple as people continue to monitor its iPhone 17 Pro orders. Guys, we're seeing across the board in all countries that the iPhone 17 is actually sold out 3 to 4 weeks in October. Normally, this is not the case. Normally, you can order whatever iPhone in whatever color and you can get it on the date it releases, which I believe is September 17th for the iPhone as well. So this, you can't actually order your iPhone at the moment, if you order your iPhone, you have to wait 3 to 4 weeks to get it in pretty much all of the Pro models, the Pro and the Pro Max, which is very, very interesting. So I think this is going to be a very popular iPhone. I really do like this iPhone. I think it's actually a big jump up from the 17. I think a lot of people are going to upgrade, especially to the Pro models. The Pro models are really, really good this year round. And then for everything we saw today, guys, it was 3,200 advances, 3,000 decliners. We saw net inflows in the New York Stock Exchange as well as the Nasdaq 100 and the S&P 500 marginally higher. And then we retook the 5-day moving average from last week. As you can see right here, we're back above the 50% mark, and market momentum across the board looks incredibly solid. Now, looking at the charts, guys, you can see that US equities were broadly green, except for the equal weighted S&P 500 that was down marginally. Along with the mid caps and small caps, they were kind of flat here today. However, when you look at the Russell 2000, that is up. The Nasdaq 100 is up. The S&P 500 is up. And largely today's price action was just driven by trade news as well as the mega caps. International stocks were broadly green as well. You can see European stocks are up, Chinese stocks are up, Indian stocks are up, Middle Eastern stocks down. Crypto high beta assets were flat here for Bitcoin. Bitcoin holding the 110,000 mark. Bitcoin looks very solid. Ethereum garnering a lot of volatility, however, down 2% today, but we were up 5% on Friday. So bit of a give and take. But again, as long as we're above this 4,000 mark for Ethereum, I think the path of least resistance continues to be to the upside. We did see yields fall today, and that had to do with some soft manufacturing data that we actually got. Volatility ticked up ever so slightly. Very interesting to see that VIX up as well as stocks up. Normally when you see VIX up, stocks up, it does point to options repricing, and that could be for the FOMC. I do think the FOMC is going to be a very mild sell the news event, but ultimately that will be a dip buying opportunity for us to go high. And that is why even on my options positioning, I'll be sort of letting them roll off very light in positioning into FOMC. I do hold a ton of equity, like my longer term holds, I'll always hold those. But generally speaking, I'm actually very light in positioning in terms of options going into this FOMC. The dollar was kind of flat here today, guys. TLT gained ever so slightly, and then gold and silver were up about 1% with very mild outperformance here from silver. And when we look at the S&P 500, guys, on the weekly chart, like I said, another weekly all-time closing high last week, and we actually had a massive gap up here on the week to start off the week, which is very, very good. The S&P 500 continues to just power and chug along. And again, it's mostly driven by tech and earnings. Now, when we hop on the daily chart, we could see that, yeah, we did have a pretty big move here to the upside. However, we did see a bit of selling at the top. The bears did come in. If we go to the 1-day chart, you can see, yeah, we had a bit of a gap up, bit of a rally, and then we actually had, just higher highs, lower highs, lower lows into the day, finishing at about the 6,600 area. You know what's actually crazy? This is my end of year target. My end of year target for the S&P 500 is 6,669. So we are nearly there, and that would have represented about a 12% increase from the start of the year. So it's actually kind of crazy to see that we actually hit that on the back of this massive tariff volatility that we got here from Donald Trump. That's absolutely insane. Things were looking absolutely dire right here, but the market does what the market does best. A lot of those tariffs rolled off, and this is where we are right now, back at all-time highs at the 6,600, just a bit over 6,600. And this is actually somewhat of a linear rally from these lows after this massive gap down. As you can see right here, this is when we got that hotter than expected inflation print. We actually just bought the dip and rally or well above these highs for the S&P 500. And guys, the market is really ultimately just pricing in rate cuts at the moment. And I think we're probably going to get some form of a sell the news event on maybe what could be considered a hawkish cut by Jerome Powell. We get a bit of a sell the news event. I think we pull back to the 6,300 area into the end of September, early October, and buy those dips, looking for a 7,000 price handle before the end of the year. That is the game plan, guys. We're looking for a dip buying opportunity after FOMC into the end of September, October, and then we're looking to buy the dip into the 7,000 region into 2026. Very similar situation for the Nasdaq 100. We're looking for an opportunity to get long after the FOMC. But guys, you definitely still want to hold exposure, because I could be wrong. The markets could keep rallying. And this is why you always want exposure in these periods, and why you just want indefinite exposure in equities and risk assets for the most part, because things can be very, very resilient. The truth of the matter is, individuals who sold right here after the tariff tantrum lows are kicking themselves with where we are right now, especially eclipsing these highs we made. And this is when Donald Trump was elected, sort of right around here. We had a little bit of churn, a massive sell-off, bought the dip, and now look at where we are right now. It's why you always just want to sit through the volatility and have capital ready to buy any dips we do get in this market. Let's look at some of our other parameters. The RSP, let's actually just go on the daily chart. You can see that the RSP, right, that's an all-time high for the RSP that we made last week. And a lot of these indices are 52-week highs. I mean, the Russell 2000 up 0.34% today. That's another 52-week high we made last week. But, trading at the highs right here, very constructed. The same is true with mid caps and even profitable small caps. So, these indices continue to just move higher, and that's largely a good thing. Now, let's actually go ahead and look at gold, because gold has seen some absolutely crazy outperformance. Now, we did trade in this very wide range. We were sort of digesting this massive move we had to the upside in the last 6 months, digesting this move, and now we're moving back to the upside, and that's an all-time high for gold. I do think we go higher. I think we see a 4,000 gold handle in 2026. And in fact, I think pairing gold with Bitcoin can actually provide really great risk-adjusted returns. However, wait for a pullback in gold. I mean, if we get a pullback to the 3,500 area, that would be the place to go ahead, buy, hold, and again, a long-term, long-duration play here with gold. And don't make it too big of your portfolio. Don't make it a big part of your portfolio. I think anywhere from 2.5% to 5% of your portfolio is a great allocation to gold, along with Bitcoin and Ethereum, although I'm pretty heavy on crypto. Nonetheless, I think gold is a good addition to have in your portfolio, and I do think this momentum will continue into 2026, fueled by easier money and currency debasement. Now, quickly looking at Bitcoin. Bitcoin has bounced off these lows right here pretty much the entire year, guys. We said we are buyers of Bitcoin right here, and we bought the lows right here, and now we are rallying. And I do think we're going to go ahead and see these all-time highs at the 125,000 area. I do think ultimately we probably are going to go higher than that. I think we're going to see 150,000 before the end of the year. You can see a little bit of structural volatility here at the top of this range, and that's to be normal. As long as we hold these lows, even if we do pull back, as long as we hold these lows right here, I think we do go onward, upward, higher to all-time highs. Ethereum, as long as we hold this 4,000 level right here, I do think we go higher. This could be considered like a head and shoulders triple top right here. The problem with the head and shoulders is that this is actually a higher low. So we'd actually probably need to go ahead and break this level. If we do go ahead and break that level, then the next support zone becomes the 4,000 area. But I do think the bears are going to defend the 4,000 area with their life. And if we do get here, I do think this is an opportunity to get long for Ethereum, to go higher, significantly higher, and take out those all-time highs. That being said, very constructive price action for Ethereum. I mean, when you look at like the year-to-date chart for Ethereum, like, is this bearish? No, it's not. This is actually really, really bullish. And I think we're just digesting like a massive, 200%, 270% rally off the lows to all-time highs right here in this price action. So I do think we definitely go higher, guys. When we look at the yield market, the 10-year yield still at the 4% mark, as you can see right here, finding a little bit of support, the 2-year yield at 3.5 as well. So it looks like the market has settled on the fact that as it is right now, we're looking for about 100 basis points worth of rate cuts for this cycle. That can obviously increase or decrease. We're going to be dependent on what Jerome Powell says at the FOMC, because we do get a little bit of a press conference Q&A with him, but we're definitely getting 25 basis points worth of rate cuts. I think the market will be spooked by 50. I think we sell off as a sell the news event regardless. So do be prepared for late week volatility with the FOMC, guys. And diving into sentiment, guys, we continue to remain in the neutral zone here in the fear and greed index, telling us that things are not overheated. Things are not euphoric. However, we are pushing into the greed zone as the market continues to trade at these highs. And that's just a testament to what the market has done in the seasonally weak month of September. And when we look at earnings, guys, the earnings picture continues to remain robust. You can see here that through 2025 into 2026, earnings are expected to accelerate, especially in small caps. In fact, small cap growth is projected to consistently outpace S&P 500 without tech. In fact, if you can see right here that small caps is expected to catch up to the S&P 500 without tech. But you guys definitely want exposure to technology stocks because they are outpacing the market earnings growth by a very, very wide margin. And in fact, we are starting to see earnings per share is now rising in almost all sectors this is forward earnings per share estimates, as you can see right here, guys. So all in all, you definitely want to stay long in this market because earnings estimates are rising, rate cuts are coming. This means margins are also going to expand. This is a very favorable environment for equities. And what rate cuts are going to do is continue to provide a supportive backdrop for the macro. We can see right here that GDP now Q3 estimate is at about 3.1%. However, it's not all guns and roses. The unemployment rate is rising and has steadily risen over the last 2 years, while the non-farms over the last 2 years, that's been in a static downtrend. However, what you do have to understand is that the unemployment rate has actually risen while growth has actually remained largely robust. The difference between the two is made up in productivity. So in other words, those people that do have jobs are being more productive, contributing more to economic growth. And that is a very, very good thing. Looking at data for the week ahead, tomorrow is Tuesday and we're getting retail sales. This is actually a pretty big indicator, especially as it pertains to the consumer, because we do know that the jobs market is weakening. That directly affects consumerism. So I think the market's going to be paying close attention to retail sales. We want a number of 0.3. The trading economics forecast 1.4. This is a deceleration from the previous number of 0.5, and then we get some big data points a little bit later on in the week, but we'll tackle it tomorrow. We also get a couple of minor names in earnings, General Mills, Lennar, and FedEx. But again, we'll look at them tomorrow, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.